We're analyzing Gladstone Land Corporation, ticker symbol LAND, Land, to see if its stock price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for land. There will be a key bonus metric along the way that might be the tipping point when analyzing land for your portfolio. Before we get into these valuable metrics, let's understand land stock performance. So Gladstone Land is currently trading for $15.57 per share. Over the last year, their stock price is down 57%. The company is coming down from their all-time highs. Over the last 5 years, Gladstone Land is compounding their stock price at 5% compounded annually. Going back 10 years since the business was publicly listed, Gladstone Land is up 11% overall, which is compounding at 1% annually. The company also pays out dividends. The company is a REIT, so they also pay out dividends. Currently, Gladstone Land has an above average 3.63% dividend yield. Their average dividends throughout this time frame would be in addition to this compounded annual return. Part of the reason we're looking at Gladstone Land is the company is very close to its 52-week lows. Their stock price has been cut by more than half from their 52-week high. Right now, about 2% of their shares outstanding are sold short, and Gladstone Land is about a $556 million market cap, and they have about a $1.2 billion enterprise value. For more background about the company, Gladstone Land Corp is an externally managed agricultural REIT. It's mainly in the business of owning and leasing farmland. It manages operations in one reporting segment. It's focused on the ownership of high-quality farms and farm-related properties that are leased on a triple net basis to tenants with a strong operating history and deep farming resources. The farmland is predominantly concentrated in locations where farmers are able to grow either fresh produce annual row crops, such as certain types of berries and vegetables, which are typically planted and harvested annually, or certain permanent crops like almonds, blueberries, pistachios, and wine grapes. To a much lesser extent, it also owns farms that will grow certain commodity crops, such as corn and beans. The company may also acquire properties related to farming, such as cooling facilities, processing buildings, packaging facilities, and distribution centers. Gladstone Land pays monthly distributions to its stockholders and has paid 93 consecutive monthly cash distributions on its common stock since its IPO in January of 2013. The company has increased its distributions 20 times over the previous 23 quarters, and it currently pays out about 4.5 cents per month, which is about 54 cents per year. Starting things off with metric number 1, we want their average return on equity for a REIT to be above 12%. And this is because the average publicly listed REIT earns about a 6% return on equity. So by looking for a benchmark of 12% or higher, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. Gladstone Land typically earns very minimal returns on equity. This isn't surprising given the nature of their business owning so much farmland. The agricultural industry tends to earn pretty low returns on equity and returns on capital overall, and Gladstone Land's return on equity has actually been declining over this time off of a pretty low base to begin with. Averaged out over these 5 years, the business is earning about a 1% return on equity in a given year. So this is an X on metric number 1. Next, we're taking a high-level overview of the growth of their business. So in metric number 2, we want to see revenue, net income, and cash from operations growth for Gladstone Land. Over this time frame, their revenues have more than doubled, their earnings are up 79%, and their cash from operations have more than quadrupled. Very strong and consistent growth for Gladstone Land across all 5 of these years. This is our first check of the day coming in on metric number 2. Then for metric number 3, we're looking at the business from the perspective of an individual shareholder in Gladstone Land. So here we're looking for earnings per share growth over the last 5 years. We learned that their earnings have grown by 79% over this time frame, but we also want to look at what the company has done in terms of their shares outstanding. Because most real estate investment trusts are externally funded, they're likely going to be issuing shares, and this was no exception for Gladstone Land. The company has more than doubled their shares outstanding, and through some of their external funding, they've also added on debt over this period. So even though they've had strong earnings growth, the amount of shares that they've issued outpaces their earnings growth, and so this is an X here on metric number 3. One thing to note here as well is that it looks like their earnings per share are negative. This comes from subtracting their preferred dividend payouts from their net incomes. Preferred shares aren't as common as they once were in American businesses, but the two industries that you likely see them the most are in real estate and in banking. And so Gladstone Land has some preferred shares outstanding. So again, this is an X here on metric number 3, and we are 1 for 3 so far for Gladstone Land. Next, for metric number 4, we're looking for free cash flow per share growth over the last 5 years for Gladstone Land. Their free cash flow growth has actually outpaced how the business has diluted existing shareholders. So in contrast to their earnings per share, this is going to be a check here on metric number 4, as the business has had free cash flow per share growth. So far through our first 4 metrics, we're split evenly on Gladstone Land. We have 2 checks and 2 X's for the business. Next, for metric number 5, we're evaluating how the business is using debt. So we don't want to be investing in overly levered businesses, because during economic downturns, it's overly levered businesses that are likely at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of cash from operations that the business has produced over their last 5 years. So Gladstone Land has increased their net debt position over this time. Since 2021, the business has been reducing their net debt, and currently they have $616 million worth of net debt. Throughout this time frame, however, Gladstone Land has only brought in $133 million in cash from operations. That's significantly below what their current net debt is. And so this is going to be an X on metric number 5. It's again worth understanding that real estate investment trusts tend to be externally funded. So oftentimes they're fueling their growth through either issuing shares or taking on more debt. And given the fact that real estate assets are able to take on higher amounts of leverage than other types of assets, these debt loads may or may not be a potential concern for you, especially relative to some other types of businesses. If they are, you would just want to dig into the company's filings to learn more about how this debt is structured. Again, this is an X on metric number 5. Another thing we want to point out here is that over the last 5 years, Gladstone Land has acquired more than $1 billion in real estate assets. So with an enterprise value of about $1.2 billion, the company has spent more than 83% of their enterprise value on real estate assets in the last 5 years alone. So these acquisitions are something that you would really need to understand in more depth to understand this business. Then the big metric of them all, metric number 6, we want their average cash from operations to their total enterprise value to give us a yield that's above 5%. If this is the case, this may offer a potential starting point for a reasonable valuation of Gladstone Land, and it may offer a slight risk premium to the yield of the 10-year treasury. Gladstone Land currently has a $1.2 billion total enterprise value, which we're using because it takes into account both their market cap and their net debt position, and it'll give us a perspective of the business that's more similar to as if Gladstone Land were a private company. So we learned in the last 5 years that the business has produced $133 million in cash from operations, meaning that in an average year, the company produces about $27 million in cash from operations. When we divide their $27 million of their average cash from operations by their $1.2 billion total enterprise value, that gives us about a 2.2% average cash from operations to enterprise value yield for the business. This is coming in below that risk premium and also below the yield of the 10-year treasury. So on an average basis here, this is an X on metric number 6. Worth being aware of is that the company has produced $44 million in cash from operations over their last 12 months. When we divide that by their $1.2 billion total enterprise value, that gives us about a 3.7% current cash from operations to enterprise value yield for Gladstone Land. So that's more in line with the yield of the 10-year treasury. Again, though, that's below that risk premium we'd be seeking, and so this would be off on a current basis as well for the company. In just a minute, we're going to perform a discounted cash flow model to come to a more concrete estimate for an intrinsic value for Gladstone Land, but we need to cover a bonus metric first. And please be aware that this type of analysis isn't financial advice. It's not a buy or sell recommendation of any security. While these metrics are simple, when they're combined together, they can be very powerful. So this analysis is meant to be taken in holistically. As our bonus here, we're looking at Gladstone Land's dividend profile. So again, Gladstone Land pays out an above average dividend yield of 3.63%, which is double the yield that you'd be receiving from an S&P 500 ETF. REITs are required to pay out 90% or more of their earnings as dividends to shareholders. Doing so excludes them from most types of corporate taxes. So even though Gladstone Land has a high dividend yield, we want to look to see whether the company's dividends are well supported or not, because people make mistakes all the time by blindly chasing dividends. So in all 5 of these years, Gladstone Land has supported their dividend payouts with their cash flows. And throughout this time, Gladstone Land has both increased their cash flows per share and they've also increased their dividend payouts per share. The company is special in the sense that they pay out monthly dividends. While this is a snapshot of the last 5 years of their performance, it's likely an indication that their dividends are healthy and they're supported by their cash flows. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Gladstone Land, which takes us on to using a discounted cash flow model to come to a potential fair intrinsic value for Gladstone Land. So a discounted cash flow model is based off the predictability of a business's free cash flows, and it's just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. So here we're starting with an average of the company's free cash flows over their last 3 years to give us a more normalized perspective of the business's abilities to produce free cash flows. Then we're using historical growth assumptions to project these free cash flows out into the future. So it's up to you to do your own homework here to determine whether or not these historical growth assumptions will be accurate and applicable going forward for the business. If we assume that their free cash flows decline at a rate of 6% annually for the next 10 years, then during the 10 years out after that these cash flows would decline at 10% annually, adding in the company's tangible book value, which gives us an approximation of the company's tangible net worth. If we were seeking a 15% rate of return, which is the rate of return Warren Buffett's looking for from his investments, in addition to his requirements for margin of safety, then it looks like at today's valuations of Gladstone Land that a potential fair intrinsic value for the company is right around $23.50 per share. So that does look like that's above what the business's current stock price is at. So there could be some margin of safety potential in the business. There are some key factors you need to be mindful of here. One is that we would not be doubly counting their dividends, their monthly dividend payouts, and their 3.6% dividend yield, and their annual dividend yield would be included in this 15% rate of return. The company has had only moderate cash flow predictability in their past, so it's possible their business predictability would go down in the future. Also, their tangible book value could be overstating the value of their assets, especially if they're reported on their books at cost, as it's possible that some of these assets could be coming down in price since they made their purchases, especially because Gladstone Land has acquired so much real estate over the last 5 years alone. So those are all aspects to keep in mind for the business. Most importantly is that this analysis isn't financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. In analyzing Gladstone Land Corporation, ticker symbol LAND, Land, we learned that the business earns very low returns on equity. The company has grown their revenues, earnings, and cash from operations pretty significantly over the past 5 years because the company has really acquired a lot of real estate assets, especially relative to the overall size of their business. They've done this by being externally funded, raising more debt and issuing about double the amount of shares that they had outstanding at the beginning of this period. They are a real estate business, so while it doesn't look like their cash from operations would currently be able to cover their debt loads, this may not be as much of a potential concern as it would be for some other types of businesses, so that's something you'd want to dig into and learn more about. On an average and a current basis of their cash from operations to their enterprise value, it didn't look like the business was giving us a risk premium compared to the yield of the 10-year treasury. Looking at their dividend profile, it does look like their dividend's been supported by their free cash flows in all 5 of their last years, and they've been growing both their free cash flows and their dividends throughout this time frame as well. Again, the company pays out monthly dividends, which is something that not a lot of businesses do, so that could be one factor that's potentially attractive there. Performing a discounted cash flow analysis of Gladstone Land, if you've done the work and you believe those historical growth assumptions will be accurate and applicable going forward for the business, then at today's valuations, if you were seeking a 15% rate of return from the company, it looks like a fair value for the business is around $23.50 per share. Again, a lot of that current value would be coming from their book value, and there's the potential some of their assets could be overstated based off the price that they were paying for them. So with our select 6 metrics in mind and the company's discounted cash flow results, it looks like Gladstone Land is a potentially strong candidate for further research, especially given the large amount of tangible assets that the business has. So I'm happy to make an analysis of Gladstone Land today. We were looking at the business as a subscriber request, so thank you for Pong Up for recommending the company. And if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Gladstone Land with me, and have a great day.